Crypto for Beginners, how to make $100 in a day. Now, a lot of you people are just starting to get into cryptocurrencies and you're wondering, is cryptocurrency trading even lucrative? Is it even possible to make $100 trading cryptocurrency in a day? How much money do you need in your trading account in order for you to make $100 per day? This is what we're going to be talking about, ladies and gentlemen. I go by the name of Muna, and welcome to my YouTube channel. Feel free to subscribe to my YouTube channel because we are going to be talking about a whole lot of money making ventures that are really going to make you wealthy in 2024. So obviously, coming back to today's video, right? How are you going to be able to maneuver and be able to find those particular trades that are going to make you $100 in a day, and how much capital do you need? So when you talk about cryptocurrencies, right, there's obviously a lot of coins that are on the market. As you can see right over here, there's quite a lot, so sometimes it is very easy for you to get lost in the sauce, which is very confusing. So in today's episode, I'm going to be giving you a strategy in order for you to streamline the best momentum trades that are going to obviously play in your favor as far as making cryptocurrency profits is concerned. So the first thing that you need to do is you need to figure out the right type of resources, because knowing the right type of resources is going to help you search and be able to identify the projects that you're supposed to be trading, and just basically you're going to be able to easily decipher what you need to be looking at. Just like I told you, right? There's a lot of overwhelming information. Everybody's talking about coins. There's a lot of, coins that are really out there to make you confused. So the type of resources that you're supposed to use in order for you to streamline and be able to know the projects and the coins that you're going to focus on a specific period of time. Okay, and the other thing that you're supposed to remember when it comes to trading cryptocurrency is you're supposed to identify the type of time frame you're supposed to be analyzing. Time frame is going to be very important, because understanding the time frame that you're supposed to be focusing on is going to allow you to sort of arrange your trades according to how fast the trades are going to turn out to be profitable. Because by the end of it, or you do not want to end up trading a coin which is going to end up pumping and exploding in the next 1 month, because you have to have a certain priority with regards to how you rank your trades. So having an understanding of the time frame that you're supposed to be looking out for and the time frame that you're supposed to be using when it comes to trading is very important, because knowing the time frame is going to help you prioritize your trades. Priority is very important, because when you have a priority, you have a clear defined period that you're going to use in order for you to actualize a particular trade, in order for you to look out for certain metrics and certain factors. Okay, then the other thing that you're supposed to look out for is what is going to be your trading strategy. Your trading strategy. And what things are you going to be looking out for, especially with regards to your trading strategy? Do you have any sort of indicators? Do you have a few factors that are supposed to align? Are you looking out for certain metrics to sort of align in order for you to qualify your trades? So this is a very important word that I'm using: qualifying your trades, because not all trades are equal. I might give you a few projects that are, seemingly going to do very well. They've got a very bullish long-term perspective. They've got a very strong team, but not all trades are going to be equal. So as you're going to discover, right, even if we take a look at the markets right now, if we go to the 1 hour time frame, right, we've got some coins that did very well. Blur did 24% today. in the last 7 days, it did 24%. Today it has done about 9%, while Clay has done about 3.2%. Mina Protocol has done about 7.9%. So as you can see, these coins have got different priority, and you can rank them differently, because as we saw, right, obviously Mina, or rather Blur, had more momentum. Okay, Blair had more momentum in comparison to Clay and in comparison to Mina, because it did a 9%. So, what factors, what trading indicators, what trading criteria were you supposed to use in order for you to pick Blur over Mina Protocol or Clay Protocol or even Render? So, these are the things that we're going to be talking about. So, remember, you need to have the right resources. You need to figure out the time frame that you're going to be using, and a time frame as far as picking out the priority trades that you're going to take. And then you're also supposed to have a trading strategy. What trading strategy are you going to be having? What momentum indicators are you going to be having? So to all the absolute beginner traders, right, I'm obviously using a lot of terms and terminologies, and I really apologize. I'm assuming you do have like some basic understanding of how to use TradingView, because TradingView is one of the resources that you're going to be using. If you don't have TradingView, I'm obviously going to have a link in the description. So this is basically a platform that really allows me to sort of use technical analysis, because it has got these tools and these amazing things that really help me sort of get to plan my trades and get me to rinse and decipher what trades are going to be able to do very well. It's a very good trading platform. So just like I talked about, right, as far as resources is concerned, right, TradingView is one of the resources that you're going to be using in order for you to discover the coins that are really going to end up making you $100 per day. Okay, so the other thing that I forgot to mention is how much money do you need in order for you to make $100 in a day? So there's a lot of different ways of making $100 in a day, and let me just decipher this by let's even use different colors this time around. So in order for you to make $100, right, you just need to make 10% of $1,000. Okay, 10% of $1,000 is going to give you $100 per day. So if your trading account is $1,000, right, you just need 10% in a day. And this is very possible, because take a look at what has been happening. There's quite a number of coins that have done 10% in the last 24 hours. So if we click on 24 hours, right, Celestia TIA has done about 13%. So if you had invested $1,000 in the past 24 hours in Celestia, if you were trading Celestia, right, you would have made $130. Okay, so it is absolutely possible. Look at Thorcha and Rune. If you had invested $1,000 in Rune in the past 24 hours, you'd have made $150 in the past 24 hours. There's quite a lot of opportunities, and yes, indeed, it is absolutely possible for you to make $100 trading cryptocurrencies, even as a beginner. So this is one of the reasons why you're supposed to listen to this strategy that I'm going to be giving you, because I have been trading cryptocurrencies since 2016, and trust me, I have done a whole lot. And by the way, subscribe to my Patreon account, because I'm going to be giving you a lot of trading opportunities, and you guys don't really have to go through this. You can just follow my blueprint, and you guys are going to be able to make a whole lot of money. All right, so yeah. The other method that you can use in order for you to make $100 per day is obviously getting to utilize leverage trading. But leverage trading is something that, I wouldn't encourage cryptocurrency beginners. So this is something that I would, pretty much discourage you from doing, because it's going to really, help you lose money very fast. Because when it comes to risk and reward, risk analysis, a lot of people usually tend tend to overlook that aspect because it's a very important aspect of trading. So when it comes to leverage trading, right? Leverage trading is basically getting to borrow money from a cryptocurrency exchange and using way much more money than your account has. So in case you are leverage trading, right, in order for you to make $100 in a day, right, if you're using a 10x leverage, your account needs to be about $100 account. If you use $100 account and then you use a 10x leverage, okay, that means every 10% that the price moves, right, you're obviously going to be able to make 100% of your money. Now I know this obviously went through a lot of people's heads, right? But trust me, if you're a beginner, don't even listen to this part of our conversation. Okay, so in order for you to make $100 on $100 account, right, you need to use 10x leverage, and you only need to make a 10%. The price needs to move about 10% in order for you to make 100% of your money. Okay, if you're using 10x leverage, you need $100 account in order for you to make 100% of your money, which is $100, and the price of the coin that you're trading only needs to move about 10%. So this particular method, trust me, you do not want to use it, but it is a way in order for you to make $100. Okay, so the other method is obviously getting to break down this $100. You can use half of it, right? In, let's say for example, you've got a $500. That means you need to make 20% on it. Okay, so 20% in a period of 24 hours, it is possible to do. All right, it is possible to do, but it is also highly unlikely when it comes to probabilities and just the way the cryptocurrency market is set up, right? In order for you to make it to find a 20% move on a daily basis, I mean, you're really going to have a tough time. Of course, in a weekly time frame, you are likely to be able to make about 3 trades that are going to yield you 20%. In a week, you can do it for about 3 times, and I'm telling you this because I'm a pro trader and I've been doing this for a very long period of time. So you are better off making 10% per day using a $1,000, which is going to yield you $100. So if you have a $500 account, I would really advise you to bump it up all the way to $1,000. So I recommend having at least $1,000 in your account and only making 10% of it, and you're going to be able to make $1,000. So if you're able to make $1,000 in a day, right, that means in a month you are able to make around $3,100, which is a very good amount. A lot of people in the rest generally in the world can do very well with making 3,100 passively. So that is something that could be very helpful to you. So if you are able to execute the things that I'm going to be teaching you in today's episode, you are going to be able to make around $3,100 passively, just using some simple crypto for beginner trading methods that are just going to be so mind-boggling, and you're going to realize that this is absolutely easy to do. So anyhow, let's move over to the next slide, and let's talk about this, and let's decipher how you can quickly do it in a short period of time. So number one, let's talk about the resources. What type of resources do you need? So as far as resources are concerned, right, let me just change the colors. As far as resources are concerned, number one, you need a few websites that are going to be very, very, very helpful to you, and these are going to give you a lot of material that you can use, and it's going to help you a whole lot. So as far as resources are concerned, number one, you can look at a lot of different cryptocurrency aggregators. These are websites that are going to sort of have a hierarchy of the the best performing platforms, the best performing crypto projects, the best performing cryptocurrency. Basically, they rank cryptocurrency. So cryptocurrency market capitalization is going going to be highlighted. You're going to be seeing a lot of different metrics as far as the volume is concerned, the market cap is concerned, because these are the different things that are needed. So let's take a look at CoinGecko. Okay, if you take a look at CoinGecko.com, it is one of the many different cryptocurrency aggregators that you're going to be able to utilize and find. Okay, so the other one that I know is Coin Paprika, coinpaprika.com. This is also a very good website which really does very well with regards to ranking coins, and the other one is Coin Market Cap. Okay, so these are the different variants as far as cryptocurrency aggregators are concerned, and you are definitely going to be able to use a lot of material from there as far as picking out the cryptocurrencies that you want to use. So which one do I recommend? Well, personally, I'm fond of using CoinGecko because CoinGecko has got a lot of established and a wide variety of cryptocurrency projects, so you can use these three different websites with regards to ranking and getting to identify what cryptocurrencies are moving very fast, and the market capitalization, the circulating supply, and so on and so forth. Okay, so as far as resources is concerned, these are the best cryptocurrency ranking websites that I would recommend. And the other resource that you need is obviously TradingView. Just like I told you, right? TradingView is the best platform where you can be able to do your technical analysis. So as far as resources are concerned, I think these are going to be very sufficient for your $100 a day making journey. So why do I recommend consistently looking at these cryptocurrency aggregators? Because it's going to help you quickly make decisions. Let's say, for example, I want to pick out the best performing cryptocurrencies in the past 7 days. I can just click a button, and then I'm going to be able to see that Terra Luna has been doing very well. So why is this important? Why is getting to have access to such a database going to be very important for you? Because it's going to help you understand which coins have got the best momentum. So momentum is something that is going to really help you do very well, because when it comes to trading, right now we are in a bull market. Okay, so when you've got a bull bias, okay, so we have bull and bear markets, right? So bull and bear markets. When you have a bull market, it simply means that trading cryptocurrencies to the upside is something which is going to help you make money. So you're going to have a longing bias, so you're going to be longing slash shorting the markets. Okay, so basically longing the markets is just simply buying, holding, and then selling it at a very higher price in order for you to sort of lock in your profits. When it comes to shorting the market is just basically selling in order for you to sort of cash out at a much lower price. So these are going to help you understand where the momentum is, okay, the momentum of the trade, because you do not want to end up shorting the market when we are in a boom market, or you don't want to be longing the market when we are in a bear market. So understanding the momentum is going to help you get to actualize your 10% in a day, because if you have coins that have got a very high likelihood of doing very well, right, the momentum is working for you. Let's say, for example, let me give you this analogy, okay? Let's say you are going down a stream. It's easy for you to follow the current. The current of the water is going to help you use less energy, and it's going to help you reach your destination faster. So this is one of the reasons why I really consider myself to be a momentum trader, because the momentum is going to help you sort of easily trade coins, and it's going to help you get to your destination faster. So understanding where the momentum is going to to be like 50% of the work that you're going to be doing. So once you get to highlight and understand what type of momentum is, going on, then you're going to be able to organize your trades better in a very sort of advantageous way so that you can be able to win. So understanding the momentum is going to be very good. So I'm not really going to be able to like dive really deep into understanding how to understand momentum. Yeah, but basically you can do your own research. At least I'm pointing you in the right direction. Okay, so these aggregators are going to help you identify where the momentum is going to be able to go. So the other resource that I forgot to mention is obviously getting to look at the different cryptocurrency exchanges. Okay, crypto exchanges have got data that is going to be very easy for you to analyze. Like for example, a lot of people use Binance. Okay, Binance.com. Binance.com is also an aggregator that has got a lot of data as far as this cryptocurrency is concerned. So when you're using Binance.com, right, you are easily able to replicate what these coin aggregators are doing, but it's just going to be sort of specialized. So this is one of the reasons. Let's say, for example, when we go to Binance.com and then we hit markets, these are the markets performance with regards to all these different cryptocurrencies. So as you can see, there's this new listing, there's Blair, which is doing very well. There's this top gainer right over here. So it obviously helps rank what has been happening on this particular cryptocurrency exchange, and you can see the real-time volume, because the volume is going to be way much more accurate in comparison to the aggregator, because the aggregator could have like aggregated volume. So if you take a look at Terra Luna, right, this particular 24-hour volume is aggregated collectively from all the different exchanges plugged in, and facilitating this Terra Luna classic coin to be traded. So this is the aggregated volume. So this is not the overall picture, but if you go to Binance.com, right, or any specific, let's say for example we click on Terra Luna, it's going to tell us where the volume is coming from. So if you take a look at this, right, Binance.com is having a volume of 122. Okay, this is the specific volume for this specific crypto exchange. If you take a look at this other exchange right over here, Togo Crypto, it is a cryptocurrency exchange. The volume is only 581. So if you take a look at this, right, this information is already helping you decipher and understand where you're supposed to be positioning yourself, because you do not want to be on Togo Crypto where there's very few trading volume, because if you look at 122 million in comparison to 581,000 US dollars, obviously there's a huge discrepancy, and you would obviously gravitate towards Binance, which has got a lot of trading volume. So if you take a look at OKX, there's about 17.6 million, which is fairly decent etc. So these aggregators are going to give you aggregated, collected sort of data. But if you go to a specific exchange, you're going to have like the real-time usable data for that specific exchange, which is going to help you streamline where you're going to place these trades, because understanding where to do your trades is also a very important key factor of what's going to help you determine your profitability. Because sometimes if you go to unknown exchanges, you're not going to be able to cash out. There isn't going to be any liquidity is okay. Now I'm talking about some other stuff, all right, but I understand you guys have been doing your research, right? So liquidity is going to help you move in and out easily. There's a lot of different market makers, there's a lot of trading depth. Oh man, yeah, so please subscribe to my Patreon group, okay, and feel free to send me some emails in case you need any help. Feel free to reach out to me. I can provide these one-on-one consultations, and I can make you a pro trader in a matter of 2 weeks, even less than that. In 2 weeks, if you have a trading consultation with me, you're going to be an expert trader and you're going to retire filthy rich, trust me. Okay, so anyway, moving on and going back to what I was saying, right? So obviously, boom, you already understand the momentum of the trade. The other thing that you need to understand is, once you get to decipher the momentum and where the trade is going to go to, right, you obviously now need to figure out what time frame you're going to be using as far as trading your crypto is concerned. So understanding time frame is something that we're going to sort of talk about, and it's obviously going to get you a little bit confused because when it comes to time frame and timing, whew, on this one, I need to sit down with you, but I'm going to be as basic as I can, and I'm going to, illustrate what I really mean. So when it comes to time frame, right, this is, bake.usd. If you take a look at tradingview.com, these are the different time frames that are available. We've got the 15 seconds, the 1 minute, the 5 minute, the 10 minute, the 15 minutes, etc. So the time frame is a period of time where trade data has been consolidated and it has been, sort of recorded in order for you to use it for your analysis. So understanding what time frame to use is going to be a very important aspect of your profitability, because different time frames have got different meanings. So let's go to the highest time frame. Okay, so as far as trading is concerned, the highest time frame that you can use to analyze coins is the 12 months, which is a 1 year period, right? So if you take a look at this particular, okay, let's go to Bitcoin, because Bitcoin has got the longest trading data as far as you know coins are concerned. So if you take a look at the 12 months, this is a 1 year period, right? So if you look at the 12-month trading data of Bitcoin, this is what we're seeing. Well, this is the data that we're seeing. Okay, now let's flip it over and go to the 6 months trading data. Look at how different the chart is going to look, and this is the information that you're being given. It's very different from the 1 year data that we just saw. Look at the difference between this and that. Very different. Okay, now let's break it down even further. Let's go to this 3 months time frame. Now looking at the 3 months time frame, now the chart looks way much more clear. It looks way different. You have more data to use in order for you to plan your trades even better. Now let's even go down in a smaller time frame. Look at the 1 month time frame. Look at all that data that you're having. So using these different time frames, you're able to analyze and have a different perspective of what is happening to a particular project. Now let's move over to a smaller time frame. Look at the 1 week time frame and look at what amount of data we are able to decipher from this. We've got a lot of data. So the sweet spot of trading. Now listen to me carefully, okay? The sweet spot of trading, as far as I have been back testing, for me is, especially if you really want to make your 10% in a day. So remember, you're trying to go in and out of coins in a day. And by the way, when it comes to trading cryptocurrencies, you have to implement different trading strategies. Okay, you have to have a daily trading strategy. You have to have a longer period of time trading strategy. You have to have a long-term perspective as well, where you just buy and you just forget. Okay, so you're going to be using different trading strategies depending on the season of the crypto cycle, because trading has got cycles, cryptocurrencies have got cycles, and sometimes in the bear market, when prices really get to depreciate and really get to drop as far as 90%, obviously you can buy and hold for a longer period of time. You can't really use the same strategy when you are just literally having like all-time highs. You're having the peak of a season. You can't be buying and holding, because you're going to deplete all your money. Okay, so these different trading strategies are going to be utilized according to the cycle of the cryptocurrency markets at that particular moment. So you have to take that in consideration, because this is one of the reasons why a lot of people don't end up making money and keeping the money. Most of the times you come to the markets when everything is bullish, when the news articles are saying you're going to be the next millionaire because Bitcoin is going to be $1 million US. So you listen to the hype and you fall for it, and then you just never get to sell. Okay, because you don't really understand the market cycles and what usually happens around these ends. So this is one of the reasons why I'm breaking this down. So have different trading strategies depending on the cycle that we are in, depending on the momentum. Remember, this is why we talked about the momentum. Okay, so coming back down to the sweet spot time frame of trading that I've discovered, especially if you are a sort of short to mid-term trader, I think these are the best. The 3-day time frame, Okay, the 24 hour time frame and the 24-minute time frame. So these particular time frames are really going to give you the best optimum trades. With these time frames, you're going to have the best trading outcomes that you can ever have, and this is really going to help you make a lot of money very fast. So please take a note of this: 3-day time frame, 24-hour time frame, and 24-minute time frame, because this is going to help you come up with a strategy. Okay, so one thing that I would love you to go and research is the trading screen strategy. Okay, the trading screen strategy is something that is going to help you understand what these different time frames are going, what role these different trading strategies are going to play with regards to picking your entries. Okay, so the other thing that we need to talk about is entries and exits. Because entries and exits are going to really, really determine your profitability. Okay, entries and exits. So, how do you get to utilize a time frame in order for you to time your entries and in order for you to time your exits? Now, this is going to be a little bit confusing for you, but I'm going to do my very best to make you understand. But best believe the time frame that you're going to be trading in is going to help you understand your entries and your exits. So let me just minimize this in order for you to understand. So remember, I'm using the 3-day time frame, the 24-hour time frame, and the 24-minute time frame. So, just to give you a context, this is how different these time frames are. So, let me click on the 3-day time frame. This is what we're saying on the 3-day time frame, right? This is the data. So, on the 3-day time frame, right, the momentum has been towards the upside. Okay, the upside is the definite momentum. Okay, now let's look at the 1-day time frame. The 1-day time frame looks like this. If you look at this data, right, we are obviously beginning to range. It obviously gives you a little bit of a different perspective right there. Okay, now let's look at the 24-minute time frame. The 24-minute time frame has been very informative, and from this you were able to sort of have access to data that you were not able to see in the 3-day time frame and the 24-hour time frame. So if you were using the 24-minute in comparison to the 3-day time frame, right, you would have obviously avoided this dump, because you would have seen that, okay, here the momentum is reducing, the momentum is running out of steam, let me get out, and you get to avoid that. Here you are able to sort of jump back in when you see that the momentum is beginning to build up. Okay, so using the time frame strategy, I'm able to prioritize my entries and my exits, and also be able to use the momentum to being able to use the momentum. You guys understand what I'm talking about. The momentum is going to be easily identified using the time frame hierarchy that I'm talking about. Okay, so basically, to break it down for you, 3-day, 24-hour, and 24-minute time frames. Your 3-day time frame is going to be your most potent time frame that you are going to be in tandem with. Okay, the 3-day time frame is going to be your guide. Whatever the 3-day time frame is telling you, right, that's the momentum you're going to be using, and you're going to set your trading strategy towards this particular time frame. You're going to be aligning your trades on your biggest and your most relevant time frame. So the 3-day time frame is going to be your momentum sort of guide. Then the 24-hour is going to be your sort of counter trade, or rather counter time frame, that is going to help you get to understand what's happening. And then the 24 minutes is going to be your entry and your exit time frame. Okay, so let me repeat that. the largest time frame or the biggest time frame that you have is going to allow you to use or identify the momentum which is supposed to sort of dedicate to your trades. Okay, the 24-hour time frame is going to be your counter momentum, which is going to allow you to sort of find the perfect entry and exit. So let's say, for example, the 3-day time frame is sort of going up, right? Let me do this, okay? Because this is going to help you clearly understand what I just talked about, because it's going to be a little bit confusing. Okay, so imagine the momentum is going towards the upside. Okay, you've got an up momentum, so you're going to be making long trades. You're going to be making long trades, and you're going to be buying in order for you to sell higher. You're going to buy low and sell higher. Okay, this is your 3-day time frame. Okay, the bigger time frame is going to allow you to prioritize your trades, whether longing or shorting. Okay, so the 24-hour is going to be your counter trend or your counter momentum trend identifier. So in order for you to time your entries and your exits, your entries are just basically when you're going to be buying, your exits are going to be when you're going to be selling. So when the 24 hour, or let me just call it a 1-day time frame, okay? 1-day time frame, okay? This is going to be your counter momentum. This is when you're going to be able to now be eager to look for entries and exits, because you know that, okay, now I can be able to enter and look out for the pump continuation to happen. Okay, so this particular entry right over here, you're going to be able to time it, the bottom of this particular entry, by using the 24-minute, okay, the 24-minute time frame. So this particular strategy that I just explained and deciphered for you is called the triple screen trading strategy. So I'm looking for some text. Yeah, this is where I get the text. Okay, so this particular strategy is called the triple screen trading strategy. Okay, it's really going to help you find entries and exits. Okay, triple screen trading strategy. Yes. Okay, please, once you're done watching this video, go and research the triple screen trading strategy, because everything that I highlighted is going to be very, very useful to you, and you're going to be able to time the absolute bottom and the absolute top as far as momentum is concerned, and as far as your entries and exits are concerned. So boom, now you understand what the triple screen trading strategy is all about, and you're able to execute your trades. So now let's go back to our hypothesis here, as far as picking out the best coins to trade in order for you to get your 10%, which is going to give you your $100 per day. So getting back to our entries and exits, right? I have obviously given you the entry and the exit. The 24 minutes is going to provide you with the entry and is also going to provide you with the exit, because at this particular moment, when you run out of momentum, the 24-minute is going to give you that momentum loss, and you're going to be able to sell and exit. So you've got your entry and you've got your exit. This here, right over here, could also have been an exit, because it's a 24-minute and you're able to sort of allow yourself to get rid of that particular trade, and you're supposed to get to lock in your profits. So when it comes to trading, in order for you to have money, you need to be profitable. You need to be able to lock in those particular trades, and just basically get to keep your money and increase your bags. So there's a lot of different trading strategies that are going to help you identify the loss of momentum. Let me just give you some basics, okay? So using an indicator such as the RSI, the relative strength index, is going to help you identify that, okay, when I'm on the 24 minutes, right now we're using the 24 minutes for exits and entries, right? When I'm on the 24-minute, this particular high, when the price, or rather the RSI indicator, is above 90, I'm supposed to be looking out for an exit, okay, if I entered in a trade. So when the RSI is at the bottom here, when it's below 20, I'm supposed to look for an entry. It's literally that simple, okay? So the RSI is a momentum, indicator, because it shows the strength and the weakness of a particular market. So it just literally gives you the entries and the exits. So now if we look at the chart, okay, let's look at what has been happening on the Bitcoin graph and what we're supposed to what I was talking about as far as trading is concerned and what has been happening. So let me just zoom in order for you to identify what I meant with regards to your exit. Okay, so boom. Okay, this right over here and that right over here, these are your basic entries. So within these entries, there are obviously peaks and valleys, okay, but overall the trend, since we already know that the 3-day time frame is absolutely bullish, we're expecting the price to continue. So you enter there, boom, you exit like that is your profit. This is your profit, okay, and then you rebuy back. You rebuy, the price continues going up, and you make a whole lot of money. So take a look at this. Okay, this was the time frame where we got that buying indicator. It's corresponding to that particular level. Do you see this particular level? Exactly. You buy, that was your entry, and then boom, you exit. You exit right over there. Literally that easy. Trading is very easy provided you have the actual blueprint. Okay, so now using this particular time frame that I told you about, right, the 3-day to 24-hour and the 24-minute, you're able to time your entries. So now how do you get to be able to identify a move before it happens? You have to be consistently looking at different metrics. So let's open another slide. So momentum indicators that you're supposed to look at. Okay, momentum indicators to look out for. So let's change the background. Where is the background here? Okay, we'll just keep it white like that. I'm sure you guys wouldn't mind. Okay, so momentum indicators that I usually use. Okay, volume, because they say volume precedes price action. So when you're seeing an increase in volume, especially for coins that didn't have much volume, right, then it's signifying that there's a lot of interest. So volume means there's interest with regards to that particular project that you're looking at. So this is one of the reasons why I was saying, if you consistently look at the aggregate data that is being provided for by an exchange, okay, because you're able to rank the volume that is happening on a daily basis. Take a look at this. This is ranked with regards to the highest volume, okay, the hierarchy. So if we click on volume, right, it sort of gives us the lowest volume, the lowest performing cryptocurrencies as far as volume is concerned, to the highest performing cryptocurrencies as far as volume is concerned. So if you look at the hierarchy, right, you're able to have your own sort of ranking system where you specifically wake up each and every morning and you look at the markets and you take a look at the coins that are beginning to take off as far as volume is concerned. So let's say, for example, we go to page number 4, right, where the coins are less than 20 million US dollars, right? And for, by the way, the sweet spot that I found with regards to Binance is when coins all of a sudden start having an increase in volume above 20 million US dollars, right? Let's say, for example, they were ranked, they were ranked below 8 million US dollars, and then all of a sudden the volume spikes up and goes to about 25 million US dollars. So on a daily basis, if you're taking a look at a coin, right, like let's say, for example, CFX, is about 10.3 million US dollars. And then all of a sudden, the day after tomorrow, the rank, or rather the volume profile, just increases to about 30 million US dollars. Then I know that this coin is about to have its momentum increase, because there's a lot of interest. There's a lot of sudden buyers trading with a whole lot of volume suddenly. So this is one of the reasons why volume is one of the best momentum indicators that really show you that a coin is about to blow up, and you're supposed to prioritize it. And the best thing about trading is you have to get in before the masses. You have to get in before everybody thinks it's cool, and before everybody sees that, okay, this particular trade is going to absolutely blow up. And volume is going to give you that particular heads up. It's going to give you a heads up, and you're going to have an edge with regards to setting in your position, buying in advance before everybody gets to buy, and just basically being able to milk the whole entire profits. Okay, so volume is one of the best indicators. The other indicator is the price action. Price action is going to be a very complicated topic for you guys. So with regards to price action, I use Heiken-Ashi candles, because Heiken-Ashi candles really help me decipher the trade. So what I'm talking about, price action is basically the close and the open. So if you take a look at my trading view, right, the way my candles are being represented or being presented is very different for a lot of different people, because a lot of different people have got regular candles. Okay, so I'm not really going to talk about candles, because you can research these things. And candles started in Japan, etc. There's the open, there's the close, there's the doji candles, all that stuff. Okay, so let me switch it to regular candles. So this is what you're most likely going to experience when you open your account. Okay, so this for me is very blurry. It's very it's just too much information. Okay, so when it comes to trading, I really love to simplify everything. I don't like analysis paralysis. I want to streamline the information as much as I can. I want to use very little information, and I want it to be very, very accurate. So to me, if I use the regular candles, it's so it's so overwhelming for me. So this is one of the reasons why I love using Heiken-Ashi candles, because Heiken-Ashi candles are really going to give me a basic breakdown of what is happening. I don't really need to break my brains with regards to deciphering what a candle means. I know when they're green, it's absolutely bullish. When they're red, it's starting to sort of be dangerous for me, and I need to be looking for shorts. So just using the trading candles, right, the Heiken-Ashi candles, you're able to already understand the momentum of a particular project, which is going to really be very, very useful for you, because you already have half of the information that you need. So green candles is obviously a very bullish narrative, and when it comes to dojis, you can be able to identify that, okay, this particular doji candle shows indecision. However, the prevailing trend is in an uptrend. So even though you have a red candle right over here, the momentum is still towards the upside, and you can still basically get to find your entry right over here, and you're going to end up having a winning trade right over here. So when you are having a very definite uptrend, and all of a sudden you start seeing this particular loss in momentum, you know that there's going to be a correction, and you're going to be able to avoid that. Okay, so price action is also going to help you sort of pick out the momentum. The other momentum indicators that are going to help you are obviously oscillators. Oscillators are just basically indicators, oscillator indicators, okay, such as the RSI, the simple moving averages, or the exponential moving averages, and stuff like the MACD. Okay, the MACD. These are the different oscillator indicators. So an example of the RSI is something that we already talked about, right? Let's take a look at this. Okay, so these are basically oscillators that I have for momentum. Okay, the MACD is right over here. It's just a basic oscillator which shows the crosses, the bearish cross, the bullish cross at the bottom. These are just momentum indicators. So in order for you to really get to make money, right, you just have to be able to understand price action and momentum. So these are the things that you really need. You need momentum, you need to identify momentum, and you also need to identify the price action. Once you understand the momentum, you're going to be able to easily position yourself in a winning trade easily, and you're going to be able to identify the trades that are going to earn you like $100 in a day. So yeah, what else did we miss? Oscillators, okay, and anyway, I don't really want to give you a lot of information. I do not want to give you analysis paralysis. So right now you've already got 90% of the blueprint with regards to making your $100 in a day. Okay, granted, you got all this information. And you're ready to go. So now how do you get to use this information? So basically you go back to your aggregator, look out for the coins that have been doing very well and the coins that have been gaining momentum. Okay, so if you take a look at this particular ranking system, you look at the time frame, right, the 7-day time frame. You're able to see which coins just recently started peaking momentum, or they're gaining steam. Okay, they're becoming explosive. So when you take a look at those coins, right, you just go in them. Solana, why is Solana doing very well this particular week? What's happening with Solana? You open the map, or rather the whole entire graph, and you get to understand, you get to do your technical analysis. Just like I told you, look at the 3-day time frame, you look at the 1-day time frame, you just basically get to decipher it. So why is Solana all of a sudden starting to do very well? Okay, so you use the aggregator to pick out the coins that have got the best momentum that you can use to your advantage. This is one of the reasons why I told you that the resources is going to be very important, and in order for you to even be faster, because if you use a 7-day time frame, right, you're obviously going to be most likely late for the party. So you can look at the 1-hour time frame. Which coins in the past 1 hour have been doing very well? And when you see what has been happening, right, then you go and investigate what is happening. So when you use this strategy, each and every day you're going to find countless indicators. Oh, and by the way, one thing that I forgot to mention is you're supposed to be very careful with the exchange where you put your money, because you need to have an exchange which has got a lot of trading opportunities. You don't want to put your money on an exchange which has got very few opportunities. So this is one of the reasons why you're supposed to be very careful with where you dedicate your money and where you decide to trade from. So pick an exchange which is going to have a lot of trading volume, a lot of good opportunities, a wide variety of coins to take a pick from, and you're going to be able to make your $100 in a day. So just consistently look at the 1-hour time frame, which coins have been gaining a lot of momentum. Get to research the 24-hour and the 7-day time frame. Once you get to do this, you're going to pick the coins that have got the best probability to sort of give you a 10% per day, and you're going to make your $100 in a day using your $1,000 account. So that, ladies and gentlemen, is going to be your winning strategy. Remember what I talked about. In order for you to do very well, you have to master this trading strategy. There's a lot of stuff that I really overlooked and I didn't really want to really go down because you're going to be confused. However, I am encouraging you to reach out to me, send me an email, and let's get to discuss. You've seen what you can do with $1,000 account. Now imagine you had $10,000. How much money can you make in a month? From $10,000, you can be able to make $1,000 per day. $1,000 per day each and every month is around 31,000 US dollars. So if you've got a $10,000 account amount, trust me, you can end up making $31,000 each and every month. $31,000 multiplied by 1 year, that's going to be about 310. That is over a quarter a million US dollars of opportunities. So ladies and gentlemen, feel free, if you reached this far, it means you found value in what I was talking about, and you obviously loved the breakdown of how simple it is. So please feel free to reach out to me. I do have a Patreon group. Let's get to decipher and look at the ways that we're going to help you make a whole lot of money. So I hope you found this interesting and very insightful. By the way, this is my YouTube channel. And this is the channel that you're supposed to be subscribing to. So in case you're wondering how I look like, this is how I look like. You can take a look at this video. That's my voice. I've been around since 2016. So my YouTube channel was created a very long time ago. So take a look at this. I've been making cryptocurrency videos for the past 6 years. So I am obviously a pro in this particular niche. So yeah, talk to you guys a little bit later, and hopefully you get to join my Patreon, you get to join my trading group, and you obviously book that one-on-one consultation with me so that you can be a pro with regards to trading cryptocurrencies in the next 2 weeks. So if you do book a trading consultation with me, I'm going to take you from a novice to an expert in a matter of 2 weeks, guaranteed. So obviously, with the information that I just brought you right over here, you are even ready to go. Just read and research everything that I've talked about. Play this video over and over. You don't even need me. I mean, in all honesty, you do not need me. I've just broken down how you're supposed to do it. This is 6 years of anger, losses, and a lot of frustration. So trust me, I'm really doing you a very good favor. So I hope you found this informative. Talk to you guys a little bit later. It's been your boy Muna, aka Beyond 10x, and we are definitely going to chat in the inbox. Send me those emails, and we'll get to decipher everything that you need to know. Thank you, God bless you, and remember, share this video right now.